Hey there, it's Walter here from fxjake.com, and I want to talk about looking at risk and how should I look at my trades and how should I measure my trades? What's the grading system for my trades? I'm in Forex Tester here, and you're looking at the pound yen 4-hour chart, and I've thrown an indicator on here just for fun. And what I'm going to do is I'm going to put a buy stop above price right here. And then I'm going to put a sell stop also below price down here. So it's basically, and the stop loss is going to be on the other side. So I've got, on this one, I've got my stop loss 90 pips away, right? My stop loss is 90 pips away. It says right there on the thing. So I'm risking 90 pips. And I'm going to try and take profit down here at 180 pips away. Now, so what does that have to do with R? Well, actually nothing. My R is simply what I have risk on at the beginning of the chart of the trade. So what do I have on as for risk at the very beginning of the trade? That's what the R is. So I've got that sell trade there. Now I'm going to do the opposite here. I'm going to put a buy stop. Whoops. I'm going to put a buy stop up here at this price. And I'll put my stop loss down here at this price. Again, 90 pips away. And then I'm going to take my take profit. I'm going to put 180 pips above. All the way up there. Okay? So basically what's happening is the market's kind of squeezing in here, and I anticipate it's going to break out, and hopefully it'll break out in one direction and not come back up and stop me out. So we'll just see. I've never tested this before. I'm just going to go right now with it and see what happens. Okay, it's getting really tight there. Let's see if it's going to squeeze now. Let's get out of there. There it goes. Okay, so I'm in the trade, and let's see what happens here. That's coming back. Uh-oh. Still getting a little bit choppy here. Oh, there it goes. You know what's weird? I just realized the color of these candles is the opposite. So a green candle is down and a red candle is up. That's really weird. I gotta fix that. I don't know. I don't know how I did that, but I certainly did do it, didn't I? So I'm gonna make the green ones are up and the red ones are down. There we go. That's a little bit easier on the eyes, isn't it? It just looked weird. Now what I'm going to do is I'm going to move this. I'm going to actually delete. I'm going to move the stop loss to break even on the open trade. It's up 129 pips. And then what I'm going to do is I'm actually going to delete the pending order because I don't want it to come back and then take a buy trade up there, right? So I'll just let that one ride. Now let's see. We're getting close to my profit target here. Oh no. Come back up. Stop me out at break even. Okay. So that trade was a zero R. In other words, I had zero return on my risk. My risk was 90 pips and I made 0 pips, so I had a 0 R trade. Let's do another one here. Okay, now I've got a kangaroo tail here and it's on the edge of the Bollinger Band. So I'm going to sell. Sell. Put my stop loss above the kangaroo tail here. And I'm going to take profit down here. 60 pips away. And where's my stop loss? My stop loss is 50 pips away. So I'm going to sell right there. See what happens. Okay, I'm in. And boom, it takes out the target. So now the question becomes, what was my R for this trade? So I got to go back and say, well, what was the initial risk? The initial risk was, boom, right here. The initial risk was, I opened at 26.09. My stop loss was at 26.59. So I had 50 pips of risk. Okay. But I actually I took profit at 25.49, right? So that's 51 pips plus another 9 pips. So that's 60 pips. So I made 60 pips and I had 50 pips at risk. So that's how I figure out, what was my R in this trade. So that's simple, right? So I go, okay, I made 60 pips profit. I divide by 50 pips of my original risk, and my R is 1.2 for this trade. 1.2 for this trade. That's how I manage risk. That's how I grade my trades. And that's how I keep track of my trades. Now, it's okay for my R to be less than 1, right? I know a lot of people will hear you, well, you have to risk $1 to make $2, or you have to risk $1 to make $3 or whatever. Well, actually, it depends on your win rate. If you have a really high win rate, it's okay. You can get by with fewer R on each trade. But if you have a really low win rate, you must have a much bigger R, like a 2 point something, a 3 point something, to get by with a lower win rate. So that's how I manage risk on my trades. That's how you do how you do this as the professionals do, how they rate their trades. Each trade has an R rating. The first one I had was a 0. The second one I had was a 1.2. I hope this helps, and I wish you very happy trading.